Namaste friends, let's discuss about Flexicap equity fund in today's video. Before we start to the video, I request you to please subscribe if you are new to the channel and don't forget to like and share this video. Let's see why many people are excited to invest in the equity mutual fund or directly in stocks. Same time, some people are scared to enter in this field. One reason we can see in this diagram, this is showing the maximum returns Nifty 50 has provided so far. So we can see 1600 plus percent returns. So definitely this looks very good. So equity mutual funds, they help us to give a better return over the long term. They can help us to beat the inflation. With this help, we can achieve our financial goals. We can generate enough capital for our future plans. Same time, it gives a tax efficient returns also. In past, we didn't have any tax to be paid for long-term capital gains, but nowadays we need to pay some tax. So we'll discuss all these things subsequently. We can consider a mutual fund scheme as an equity plan when there is a minimum 65% of allocation in equity, that is a stock market. Rest of the funds, it can either be invested in an equity, it can be debt, or it can be a cash and cash equivalent components. As we are discussing today about the Flexicap mutual funds, some people get confused if it is same as a multi-cap fund. There are few similarities as well as few differences we'll discuss. So minimum allocation, that is the major difference between these two categories. So as we can see here, multi-cap fund has to invest in all these three caps: large cap, mid cap, and small cap. The minimum percentage in each of the category will be 25%. Rest 25%, it is a flexible. Either you can do the investment in the equity or debt or other components. So what happens when your fund manager does allocation? They need to have very deep study. Same time, sometimes they might feel that they are compelled not to take a decision in favor of the investment return. Flexicap funds are recently introduced. So let's see what is different in this. It qualifies the same equity fund plan as the minimum investment in the equity will be 65%, but there is no minimum or maximum limit that need to be invested in large cap, mid cap, or small cap portions. So here, fund manager can take a call and distribute the investment across large cap, multi cap, and small cap sectors. So this will help fund manager to tackle market ups and downs and get the effective returns. With this diversification and the flexible allocation, which is not dependent on a specific sector or capital allocation, it generates a stable returns over a long term. Because of this reason, many funds have converted their old multi-cap funds recently into the Flexi-cap fund schemes. How do the Flexi-cap fund houses or the fund managers use the investment philosophy to generate the returns? So there are two philosophies. One is top-down approach, another is the down-top approach. Let's see the difference. So top-down approach, it checks the global indicators like economic factors like global economy, then GDP forecast, government policies, what will be the inflation rate, what are the global macros, what is the growth opportunity scope in any sector. So this top-down approach is better applied to the large cap equity space. Same time, The down top approach, it uses the company valuations, company fundamentals, whether the company management is very effective. It checks the growth opportunity scale across these stocks. What is the historical performance of a specific task? Also, it checks the ability to sustain ups and downs in the market. So down-top approach mainly can be used for mid and small cap sectors. What are the benefits of the Flexicap funds? It helps to limit the downside when the market trend is negative. It helps fund manager with the frequent rebalancing across the sectors. We can take an opportunity for dips. We can buy on corrections and adjust the allocation accordingly. It's a list of few names which are there in the market as a Flexicap funds, like Aditya Birla Sun Life Flexicap Fund, Axis Flexicap Fund, Canara Robeco Flexicap Fund, DSB Flexicap Fund. ICICI Flexicap Fund is not yet an open-ended scheme, but there is an enough going on, and soon it will be an open-ended scheme. Also, there is IIFL scheme, then Kotak Flexicap Fund, Parag Parikh Flexicap Fund. Parag Parikh Flexicap Funds has an opportunity to invest in some global stocks also. SBI also has a Flexicap Fund, and there are many more in the market. So we advise investors to go and check the list of available funds and choose best of them based on their past few years performance. Let's take a look at one sample of SBI Flexicap Fund, how they have broken down the investment allocation across different sectors. You can see maximum they have done around 30% in financial service, then IT, then consumer goods, and many more. Left side you can see a specific stock, specific allocation also, how they have allocated and distributed this fund across different lines of businesses. This diagram is taken just to illustrate how is the volatility between the small cap and mid cap funds. Same time, Flexicap fund help us to beat this volatility and give a stable return along the time period. So we have seen the yellow ones is the small cap fund return. It has given the highest return in this comparison for the last 5 years. Mid cap fund, we have seen comparatively it was more volatile, but it also gave similar returns as Flexicap. But same time, the Flexicap direct fund has given over 100% return in 5 years. So you can compare if you are a long-term investor and if you invest money in the Flexicap, you can you can definitely get a good return. In our second example, it is comparison between three schemes from Aditya Birla Sun Life. You can see here the Flexicap fund has given maximum return in last 5 years compared to mid cap and small cap. We can see the volatility between mid cap and small cap is very high, but same time the return here in the Flexicap fund is good compared to other two. So if you want to invest in Flexicap funds, what are the different options? You can do investment in lump sum. If you have a long time horizon and you don't worry about market ups and downs, so you may choose to invest in lump sum. But if you want to install in small installments, you have systematic investment plan also. Here there is a say that every drop counts. The same way every installments helps you to generate your long-term profit. Some schemes they provide weekly, monthly or quarterly SIP plans also. There is a systematic transfer plan also. So if you don't want to take the risk of investing in lump sum, you can put that amount into debt fund, and monthly or periodically you can move this amount into the Flexicap funds over the time. How much tax you need to pay on your returns? As this is a equity fund, and if you invest it more than 1 year, so that will be considered as a long-term capital gain. If your gain is over and above 1 lakh rupees, you need to pay 10%. If it is for less than 1 year, so you need to pay 15% on your profit. Also, you need to consider that in some plans, if you withdraw the amount within 1 year, you may need to pay the exit load also. So taxation rates are subject to change as per the government policies, so you can check at the specific time. If you have any questions around the FlexiCap funds or any other schemes, you can put this in the comments and our team will get back with the answers. If you like the video, you should please subscribe, like and share this video. Thank you very much.